What's up, everybody? Michael Silva here to do some technical analysis on Shopify, ticker symbol SHOP. We're going to look at multiple time frames and some relative strength in this stock. Now, a couple of housekeeping things before I get into this. If you're new to my channel, welcome. I do daily market briefs Monday through Friday, which are really the bulk of my content as of right now, and it's very important stuff. We look at multiple asset classes. It's technical analysis, but we're adding another dimension into it known as intermarket analysis. This helps us see trends throughout the market to see where we can put our money. Now, these videos right here are just viewer recommended. So what I'm doing right now is doing an analysis on this specific ticker symbol because it was recommended to me by one of my subscribers. If you have recommendations yourself, you can always leave them in the comment section below. But just so you know, it's just me on this channel, so when I get flooded with them, sometimes I just go with the ones that people pick more frequently, and then eventually when I have the downtime, I get into the other ones as well. So hope you enjoy this analysis. Let's go ahead and get into it. First off, I want to start off with relative performance. I'm looking at the technology sector, okay? Shopify is in the technology sector, and it's in the software industry. Now, this is XLK over SPY. We're looking at relative performance. What I want to point out here is, yes, it's been super strong, but take note of the current relative performance. What are we seeing take place in the markets? Well, we're seeing a rotation out of tech. Is this temporary? You have to be the judge. Or is this potentially where tech starts rolling over relatively to in other industries? Because we are seeing strength in financials. We're seeing strength in energy. So it's something to consider right now. I'm not predicting, but what I am telling you is what I'm seeing on the chart. This is hard data. It's fact. It's not me just making something up. Also right here is the RSI indicator. You can see how it's getting weaker and weaker. But since November, we're seeing a little bit of an uptick. So the trend still, short-term trend is still down from August, which rotations out of things can take quite some time. So just take note of it, okay? That helps build the framework for this analysis. Now let's hop into the monthly time frame. This gives us a good overview picture as to where we currently stand, okay? FOMO is a crazy thing, and typically what happens with the fear of missing out is you get some euphoric pushes towards the end. That dog barking in the background, that's Coco. She's all over my channel too. All right, so first off, what I want to point out is a couple things. I have two indicators down here. The MFI, that's the money flow index, and we have the PPO, price percentage oscillator. Okay, I like to look for divergences in these and just to see if there's any shifts and trends changing. First off, MFI, negative divergence, right? High, high, lower high. We have on the price action right here, a high, and then a higher high here. Okay, price is going up, money's flowing out. Take note. Price percent oscillator. It's not quite crossed over. That would be a bearish crossover. Look at the histogram here, kind of dying off slowly. But we're still way above zero. So, take it with a grain of salt, but just also take note of where we currently stand. Now, this right here is the Fibonacci retracement tool. We're tagging basically the high 1206.90, just a monster move. Like let's just call it for what it is. Like look at this. Since basically March on the bottom, okay, we're down roughly around 300, okay, at around 300, and now we're trading at darn near 1200. That's absolutely insane. Okay, but a lot of stocks have been quite insane on this huge ramp up. So what are we looking for here? Well, let's look at some key levels on the retracement. Okay, two of the more frequently tagged and or more widely tracked is a 38.2 level and the 61.8. So if everything falls apart here and it looks like the world's going to fall apart, just know that if we start seeing the price come down to this 61.8% level, the professional investors, professional traders, they already mapped out these levels. So they know that, hey, if things fall apart, we can still pick up some shares down here. Now, keep in mind, that'd be a 50% drop. Okay, that would bring in a lot of, a lot of just, I guess, bearish sentiment. And sometimes when the sentiment is extremely bearish, that's when you want to convert to potentially bullish. All right, so as we're seeing it right now, the sentiment is extremely bullish, right? Everyone goes long, go long, go long. And when sentiment is extremely bullish, sometimes we shift places. So people do things when they're not supposed to do things all the time. Now, if you bought down here and you're still up here and you haven't taken profits, that's crazy sauce, because that kind of a move, you should definitely be pocketing some change. Now, The little squiggly line here, that's the 5 EMA. We tagged it already. We broke out of this kind of a channel that it's been trading in. Let's look on the closer time frame, the weekly time frame, because this looks like a bull flag. Now notice this chop back and forth for multiple weeks, okay? Basically since June, since we got through this. Just, crazy chop. So if you're a trader, man, that must have been fun trading this back and forth, right? Because of all this volatility. Now we recently broke out on somewhat high, a little bit of an uptick in volume. Nothing crazy, okay? It would have been nicer to see this uptick a little bit higher on a volume breakout for the week. We have a negative divergence on the RSI, but look at the price percentage oscillator here. It looks like it's about to start turning up and it's above zero. That's bullish on the weekly time frame. So that's something to take note of. So the monthly time frame is turning down, the weekly time frame is turning up. This is very confusing times, okay? It's very confusing times. And like I said, I'm not trying to recommend anything or predict anything. I'm just pointing out some very important things that any investor should be well aware of, or trader. All right, next, daily time frame. Notice the channel, just a bunch of chop. And I want you to note, this is like each candle represents 1 day of price action, 1 day of data. Notice how over here at basically 11,050, in a very short period of time, it dropped all the way down to 875. All right, so be very, very careful here because of how fast this price action moves. You can make a lot with high beta, but you can lose a lot. Now, you might be thinking, well, I'm just going to trade options. Okay, that's a whole nother thing in itself because you have to look at the theta, you have to look at all the various Greeks. And then you also look at the advanced option strategies that you can use playing this. Now from a technical standpoint, price percentage oscillator going up. Okay, breakout, we're seeing some decent volume accumulation right here. That's not too bad. This is a good sign. However, let's look at the daily candles. Okay, just the other day, this was a shooting star candle. We have a strong move, and then we have a shooting star candle on a breakout. Be very careful here because these can represent false breakouts. If we start breaking back down, let's look at around these moving averages for potential support. And we'll get into the 2-hour time frame here for very soon. But notice the 200 still sloping up into this channel. That's a good sign. Okay, the 50 and the 20, they're kind of chopping sideways, but slowly pointing upward. So that tells us context, bullish context. Yeah, we might be a little overextended right here, but overall bullish context. Okay, so it's very hard to determine if this breakout is going to be continued or not. Typically, when you get breakouts, you can get backtest. And if we get backtest and it continues to move higher and breaks past this previous high, that is a very strong sign. So you might want to wait for the price action to close above the high of this previous candle to get some continuation. That to me would make sense. And or pulling back to a 200 period moving average if this was a false breakout, or even down here. But I don't like playing the chop right here. I just don't. That's just my personal opinion. Now, let's look at the 2-hour time frame. This is more zoomed in, okay? The reason why we push into time frames and look out is to hone in on our investing ideas or trading kind of strategies. So, 2-hour time frame, this just been trending right up, okay? So we have the 200 period kind of just sideways to slowly slanting up, so that's decent. The 50 sloping up, the green sloping up, they're all stacked on each other, so that's good context so far. All right, so good context so far. Look at the price percentage oscillator. We have this kind of sloping down a little bit. Just take note of it. It's a 2-hour. It's frequent. It moves quick, okay? RSI, it's not a negative divergence. However, if we start breaking above 1200, look for the possibility of a negative divergence. Negative divergences are not the greatest things to go long on. Now, keep in mind, you have to have confirmation on it, or because right now it would just be saying, hey, if the price was up here and we were like this, it's building, but the RSI can stay overextended for quite some time. Okay, let's look at some key things here. First off, see these pink lines? These pink lines are representing higher lows. That's bullish. And even if you look at here, high there, higher high, higher high. So the trend is up. This is good. What happens when we start putting in lower lows and lower highs? Well, then it's time to be very careful and look for major areas of support. Where's some support at? 11,000, 1100. See, notice how we came up here and rejected. And then when we broke through, it was just a strong move to the upside. That to me signals once resistance is broken, it then becomes a solid support. Now we haven't back tested this level yet. And that's okay because on strong breakouts, sometimes you don't even get back tests. However, if we do come back to this area, notice the 50 period sloping up into it. Notice the 20 period right around there. We have this little pullback right there. This right here could be a very good target area if you're an options trader, intraday trader, potentially a swing trader right here at 1100. But you got to be patient, right? Because we're at 1160, you have to wait for a 60-point drop, and that might not come. I mean, my personal opinion, it probably will eventually, but that my opinion means nothing because opinions are completely, I mean, they're pointless. They're not fact. All right. So let's just look at key levels. Resistance right above 1200, the high of 1184. You can play breakouts, but just make sure that you're getting confirmation on the breakouts with closed candles and or stronger volume as well. Right now, what we're doing is we had this pullback and now we're kind of wicking right here at 1160. You see this previous resistance right here. Then when we broke above, we squeeze higher, and now it's acting as support. 1160, be very careful here. If we break down, yeah, we're going to come test 1140, and then if we get through that, we're looking just in this lower range. All right. Keep also note, yeah, context is bullish, but when we start moving sideways like this, that creates somewhat flush points. It means that the bears are really putting in the lower highs right here, and the bulls are trying to hold it up. So when it breaks, sometimes you get strong flushes to the downside. Just as you saw right here where we have a strong move to the upside. The bulls were making progress, bears are trying to hold their fortress down, but then all of a sudden, boom, the bears give up and squeeze right up to the top. When you see these big moves, it's people that are short covers. They cover, so they have to buy back shares, and then you have momentum buyers buying shares, so you get squeezes. All right, same thing can happen on moves to the downside. All right, everybody, I hope these key levels help you out in your investing decisions. Like I said before, if you have any recommendations, you can leave them in the comment section below. See y'all later.